Hey, this is Chris, and in this video I'm going to be discussing some of the different ways you can own your investments. It might not be something you've thought about a lot, but I think it's really, really important and something to consider before you invest because it can have pretty big ramifications down the path. So in Australia, there's basically two broad ways that you can own your investments. If you're an individual investor, investing via the share market or an online broker or an advisor, and those ways are either via your own individual HIN number or through a custody or commingled structure. And it's something I'm very passionate about. I've spoken to the ABC about it before, and I'll put a link below to that interview. Ultimately, I created Stockspot in a way that allowed our clients to invest with a HIN. And I think some of the big benefits of this structure, where your assets are owned legally and beneficial in your own name, are very significant. And even though this form of ownership tends to be a little bit more expensive than owning in a commingled structure, because you're actually paying individual transaction costs with the ASX, the two benefits I think outweigh that extra cost are one, the security of your money. So regardless of what happens to your broker or who you're dealing with, your money and investments are safe. They're always owned by you and they can never be taken away from you. And so you're never going to be facing a situation where not only do you have the risk of the shares you own, you actually have risk of the company you're investing in. So that's one big benefit. The other one is portability. So if you ever want to move your investments from one broker to another, portability is a lot easier when your investments are held legally and beneficially in your own name, on your own HIN. In most cases, it's not possible when you're owning investments under a custodial or in a commingled structure. And so unfortunately, it might mean if you do want to transfer those assets out, you need to realize capital gains and pay tax at that point in time, which is probably not something you want to do. Now, from the safety and security perspective, the tricky thing with commingled investments is you just don't know. So there's a lot of businesses out there that are probably doing it really well. They've got a safe custodian looking after your money. They're not mixing up everyone's assets. They're not doing their own trading. They're not using it as their personal balance sheet. But the problem is it's very difficult to get visibility on this. It's not like you can have a look at their cash flow statement and their balance sheet every couple of days to actually understand what's going on. And this has transpired, unfortunately, in the last few years with some stockbrokers going bankrupt and owing their clients a lot of money where their money was commingled. The most recent example of this was Halifax Investments. You can look it up online. There's been quite a few articles written about them. They've gone into administration and there's a deficit of about $44 million missing. And so investors that were using that platform are going to be most likely getting back less than what they put in. Even though they might have had investments in BHP or CBA, they're not going to get their full value of their money back. Ultimately, there's a choice you have to make when you invest. Are you happy with custody, where the costs are a little bit lower, but there's some extra risks? Or would you prefer your assets to be held in your own name, legally and beneficially? Certainly, my recommendation and preference as an advisor to our clients is that the HIN ownership structure is better for them. It's better from a security perspective, better for a portability perspective. It's going to reduce potential tax consequences down the track. And that's why it's something I firmly recommend to all of our clients. And it's the only way you can invest with Stockspot. And if you are considering other options, it's just something to keep in mind that there's an additional risk that you should be aware of and potentially ask some questions to whoever you're investing with in order to get more comfort with that approach.